Thanks for joining me today. I'm very happy to see you here. Last week, did it feel like this? That you were trying to get some profit, probably by buying stocks. You were not sure whether you would be able to make a profit, and most likely it didn't go well. However, we already had enough signals to warn us about buying stocks. One week ago, in the last market recap, I shared this technical breadth and showed that the market was already weak, and more importantly, or equally importantly, the headwind alert was telling us that it was likely to drop more. This is what I shared in the previous market recap 1 week ago. How is the technical breadth weekly interval today? This is as of today, it became even more bearish, and we still have the bearish headwind alert. If I go back and forth between these two images, you may see here that this week the all signals percentage is 98% bearish. 1 week ago it was 83% bearish. So from 83 to 98% it became more bearish. It is still very bearish, no sign of bullishness or reversal whatsoever. And that is why if you try to buy stocks last week or even last couple of weeks, you may have been disappointed by this week's move. Not for people who took short trades. If you followed my YouTube videos or looked at my X Twitter posts, most of my trading ideas were on the bearish side for last couple of weeks, except some high dividend paying stocks. I made a nice profit as the market dropped last week, and not only that, I took some money off the table by closing several positions. I share some of my trades publicly. QQQ was one that I shared publicly, and I had multiple positions in QQQ, all bearish positions, 3 to be exact. I closed all the 3 bearish positions on QQQ, and I closed few other bearish trades as well. Why? I tweeted about that on Friday, and we will investigate more in today's session. Greetings, I'm Sagar Nandi, retired IT professional swing trading stocks in the USA as well as India markets. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share market and stock live analysis on my website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public. You are most welcome to make use of them. When I share any trading ideas, I tend to look at multiple dimensions: technical analysis, market level analysis. I use sector industry scorecard to find where to buy, where to short, look at fundamental analysis, and even seasonality from time to time. Because I try to combine all these forces in favor of my trades, they tend to be truly high probability trades. These are all the Q components that I use for my live trading. All the Q components run on Metastock platform. By the way, Metastock now upgraded to version 19. I have started using Metastock 19. I should update this slide as well. All the components run on Metastock platform using Refinitiv professional quality data, and the technical analysis component runs on TradeStation as well. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading is a risk. You and only you are solely responsible for the outcome of your trades, and I am solely responsible for the outcome of my trades. Options trading can be risky. It does not have to be. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. That was the last slide. Let's continue with the live system. I'm just beginning to use Metastock 19, getting used to that, and I'm using TradeStation as usual. The more I am using the latest version of Metastock, I am using less of TradeStation. But TradeStation is a brokerage I use, and TradeStation is also a great platform, so I continue to use both of them. Also, it is always good to have a backup system. If sometimes there is an issue connecting to TradeStation, I can use Metastock. If sometimes there is a connectivity issue with Metastock, I can fall back on TradeStation. That's why I always have these systems running on my computer during market analysis. Let's start with a look at US dollar. For last couple of weeks, I was indecisive, and I showed in the last market recap that for 3 weeks in a row, if we look at the weekly chart, price was closing at the same level. It is not indecisive anymore. It has a sharp move up in both weekly and daily. It is clearly bullish, and because it is bullish, it may put bearish pressure on the market. That's what I mentioned in my market recap earlier, and exactly that happened. It is well known that if dollar goes up, it tends to put pressure on the stock market. So dollar went up, US market came down. I shorted well ahead of others, probably many others. I never turned bullish. There is no reason to be bullish now, but I am less shorting now because market is oversold. We will look at the USA market in detail, but for several weeks I did not look at the global markets in the market recaps. Let's have a look at them. The market seems to be at a turning point. That's why many people are saying it's going to drop heavily. They are all scared. I'm not scared. I do swing trading. I manage my risk. I can make profit in all market conditions by taking small risks. I just need to find out what the market is doing, what it is more likely to do, and follow that. So let's have a look at the global markets. All ordinaries, Australian index. Is it bearish? No. The uptrend in daily is very much intact. Same in weekly. The weekly has bearish headwind, two of them. It has a bearish indecision. This week's color is bearish, shape is indecisive, somewhat bearish you may say, but daily is clearly in an uptrend unless these two trend line supports are broken, at which point it will also break the yellow direction line. There is no way to be bearish on the Australian market. Okay, one global market continuing to be bullish. Let's look at Japan's Topix index. Once again, we see a bearish headwind in weekly. Backdrop color has turned bearish. However, this week's shape is bullish. More importantly than that, we can assess the direction, the trend immediately from the so many trend lines. It is clearly bullish. We have to have many trend lines broken before we can say it is less risky to take shorts. Not going to happen in Japanese market immediately. Bullish market, there is no sign of weakness when we look at the daily and the trend lines. 2 out of 2 global markets bullish. Let's look at FTSE index, UK market. Weekly backdrop bullish, still going up. Shape is indecisive this week, but the trend in daily is very clearly bullish. There is no way to be bearish on this market unless this trend line support is broken. Then there is another trend line that has to be broken. Then there is the white direction line that has to be broken. Then there is another trend line, another. It's not going to be easy to be bearish on the UK market, at least as far as the index is concerned, anytime soon. 3 out of 3 global markets, no way to be bearish. India's Nifty 50. Weekly in an uptrend, we have just one bearish indecision with backdrop bearish color, but it is clearly in uptrend, and that is even more clear from the daily in a solid uptrend with many trend lines. Just this one trend line support is broken. For us to be comfortable taking shots, all these trend lines and the yellow direction line, they have to be broken. It's not going to happen suddenly. I should say it does not usually happen suddenly like that. In any case, it's not a time to be bearish now. We have to wait until these trend line supports are broken. 4 out of 4 global markets, there is no way to be bearish. Lastly, we look at the China CSI 300 index. CSI 300 was the weakest of the global markets for a very long time. It did recover somewhat, and now it is starting to drop again. Right from the trend line resistance in daily, trend line resistance in weekly. Here one could take short trades on this day when we had the flow trend following short setup. This has not changed. That what has not changed? The CSI 300 being the weakest of the global market, so it is again going down. So this is only one of the global markets where we may take shorts, and that was the state earlier also for all these weeks. So global market is remaining very bullish. Is it at a very high point? Yes, but that does not make it bearish. Has it changed for the USA market? I took shorts, but I took shorts at the very top, whether it is in QQQ or other instruments. Let's have a look at the USA market ETFs. Why many people are panicking now? It's to some extent surprising, isn't it? At least for those using Q systems, there were warning signs all along for a long time in many Q components. So we look at the market ETFs on Friday. We can see DIA fell by 1.2%. That was the relative best performer. IWM fell by 1.8%, worst performer. All of them fell by more than 1%. None of them fell by more than 2%. This looks very weak. But for me, that was a good thing because I was shorting from earlier and there were many signals. Let's go through them now. Dia, at a glance, the weekly had a bearish headwind at the top. Daily had a bearish headwind at the top. Broke the trend line support. In the last market recap, I showed that it was also one of the weakest market ETFs, and from last week it dropped sharply. I in fact had a bearish position on Dia also that was using contra ETF DOG. I booked profit in that as well. Why did I book profit in that? Because it is already below lower boundary and I had a nice profit. Contra ETFs are not something that are to be held for longer periods. That's my experience at least. So I had a nice profit relative to the risk taken in the trade. Dia itself is oversold, so I booked profit. Can it go down more? Yes. Is it a time to take short trade in Dia now? Absolutely not, because the stop loss will be very far away and it is oversold. So Dia is bearish but not a time to short. Well, next one, SPY. Weekly had a bearish headwind. We had the alert. Last week's candle was indecisive, bearish color. This week it fell. But weekly is very much in an uptrend. Is daily in a downtrend? No, but the uptrend is broken. There used to be a trend line support in the daily. We could find that out from the historical chart template. You may see that several trend line supports in SPY daily chart, they got broken one by one. And this is a technique I use very effectively and I mention it in my master classes. The videos are on my YouTube channel, open to the public. Watch for a market that is uptrending like SPY. It will have series of trend lines, uptrending trend lines, and watch for them to get broken one by one. When you see there is no more trend line support left, then you know uptrend is not continuing. Is it a time for downtrend? It may be, but I also say watch out for a downtrend line to be formed. That has not happened yet. It has not created lower high, it has not created lower high, lower low, it has not created downtrend line. Yes, the uptrend is under pressure, you may say, if I may quote that, cop copy that phrase from Ken Slim. Uptrend is under pressure. It is not in a downtrend. So looking at SPY, though the trend line supports are broken, there is nothing that tells, if you look at this daily chart, that we should go all out on shorting stocks. It's not a time in my view. However, a lot of people are now panicking. I was shorting earlier, I could happily book profit and waiting now. Now people are starting to panic. I have some short positions, I have some long positions all in high dividend yield stocks. I'm actually scouting for buying some good fundamental stocks. The moment it gives a signal, I'll buy. It's not that time yet, but I'm scouting for it. Let's look at S&P 1500 also. Weekly, very much in an uptrend. Daily, we can see once again trend line support is broken, but we had alerts earlier even from these weekly, daily at a glance charts. Plenty of alerts. That was the time I was not buying. I was buying only high dividend paying stocks if at all, and I was shorting. It broke below trend line support now. But is it time to short? It's coming very close to the lower boundary, coming very close to the yellow direction line. Those are areas where it may find support and it may go up somewhat. So I don't think it's time to short now. I had shorted, I have book profits, it's not a time to short now. QQQ. This is where I had three different bearish positions. So I booked profit. Is it looking bearish? No. Yes, we had early warnings. I had warnings from other Q signals also, Q analytics. So I could short it, but the daily trend line support is still holding. In spite of this big drop, 1.8% drop on Friday, I booked all my profit in the QQQ bearish positions, three of them. Is it downtrending? No. Is it uptrending? No. It's moving sideways. So at best, it is time not to buy, not a time to short as well. We have to wait for the trend line support and also the yellow direction line to be broken before we could comfortably start shorting. Lastly, IWM, small cap ETF. Once again, we had bearish headwind near the very top in weekly, bearish headwind in daily. Right on this day in the market cap, I mentioned that if next day price fell down, it was time to short IWM using false upside breakout, and it gave a box short setup. That was the time to short. This week was the time to book profit. Is it a time to take new shorts now? No. It is too close to the lower boundary. Too risky to short now. For all of these instruments, what will be a nice time to short? Let me try to draw. All these market ETFs were going up, now moving sideways for some of them, and like QQQ, for some of them it has broken a bit more. What will be a time to short is for price to go up somewhat, then drop again, giving a short setup. What could be this short setup? It could be bounce short setup, it could be box short setup, it could be flow short setup, or it could be pullback short setup. But I will rather wait for a small recovery and get one of those short setups in at least some market ETF and then look for shorting stocks. Let's look at the mega caps. Mega caps have an outsized influence on the market, more so on QQQ than on SPY, less on DIA and IWM, but they also get influenced a lot. Usually, if mega caps are very strong, usually, I mean much more than 50% of the time, if mega caps are strong, they tend to pull QQQ up first, then SPY, then IWM and DIA. Sometimes in last couple of weeks, there were big divergences between small caps and mega caps, but those were rare instances. So it's good now to look at the mega caps individually. Apple, it fell earlier. During this period, QQQ was actually very strong, and even now QQQ is just moving sideways. But Apple already fell earlier, quite a lot. What exactly do I mean by quite a lot? It came to jump thrust low, came to price extreme low for one day. On Thursday, it gave a big move up 3. Works like a clockwork, gives us a profitable swing buy candidate if the fundamentals are strong and if it is in a strong industry. That pattern of jump thrust low, price extreme low, big move up 3 came on Thursday. Is it bearish now? No. If anything, if the fundamentals are strong, industry, I don't expect it to be strong in the current market condition. Market is very weak, but this stock is moving opposite to the market. Very big mega cap, probably the biggest one. Not a time to short. In fact, looking at the big move up 3 on Thursday, I would like to look for buying opportunities. If it pulls back little bit, maybe around 170, creates a higher low and goes up, I will look to buy with a narrow stop loss. It's looking bearish to me? No. Am I looking to buy Apple? Yes. Did I buy Apple already? Small position? Yes, I did that. Right at the bottom when it started to go up using big move up 3. Let's look at the next one, Netflix. Is it bearish? No. We all can clearly see from the trend line supports is very much uptrending, weekly as well as daily. No way to short Netflix unless all these trend line supports are broken, and immediately after that we'll have a yellow trend line, yellow direction line support that needs to be broken, but by that time it will be far from recent swing high, so we have to wait for it to recover somewhat, create a lower high and come down again. The pattern that I described just now. There is no way to short Netflix now. It's very much bullish with uptrend lines. Google. Is it bearish chart? Absolutely no. We need this trend line in daily to be broken just for uptrend to be in pressure, under pressure. It is going to take quite a long time, I guess, before it can be in downtrend. No way to short Google. Microsoft. Yes, the weekly has displayed bearish headwinds. Those were warning signals. I was cautious about the market for last couple of weeks, but Microsoft itself, is it time to short? No. Daily has trend line support, yellow direction line support. It will take time before we can think of taking short trades in Microsoft with low risk. Still in an uptrend. Amazon, very much in an uptrend. No way to short. It's too many trend line supports. If all those are broken, not going to happen suddenly, has not happened like that in the past, then we'll have a yellow direction line support. It's going to take time before we can think of shorting. Do we have warning? Yes, but that does not make it a short candidate. Tesla, very interestingly, you may find Tesla also dropped well before the other mega caps. Others are all bullish. Tesla is like Apple, it dropped a lot, displayed some potential reversal signals, bullish headwinds in weekly, and in daily we had near jump thrust low, price extreme low, then came big move up 3. Works like a clockwork in a fundamentally strong stock. In a strong industry, it almost always gives us a profitable buy swing trade. I'm not going to check the fundamentals industry score now. Industry is going to be weak for sure. You may check out the fundamentals. But the question that I have for myself is it time to short? No. We have several patterns that are telling it may be time to buy. I'm waiting to buy Tesla. Of course, I have to check the fundamentals, but if this trend line support is broken to the upside, I'm going to consider buying after looking at its fundamentals. Am I going to short now? No. Just too many potential up move patterns to short now. Meta, we have warning signal, bearish headwind in weekly, but that's just warning signal. Is it in an uptrend? Yes. Has trend line support? No trend line resistance, higher high, higher low. We'll need this trend line support to be broken, then this yellow line to be broken. By that time, price will come close to the next two trend line supports. So we need those to be broken before considering safe shorting time. Not going to happen suddenly. Has not happened like that in the past. AMD, if you remember, the YouTube videos are still there. I shorted AMD, made a profit. I think I shorted somewhere here. I don't remember. You may check the videos. The warnings were there right at the top. That was the time to short. What do we have now? Bullish indecision cluster, bullish headwind. Below lower boundary. Is it time to short? No. Is it bullish? No. It's too late to short. This also fell much before the other mega caps, not going as QQQ is going. AMD, Tesla and Apple fell before. Now is not the time to short them. There are potential up move signals. Not yet. AMD I am less keen to buy now looking at the weekly, but for Apple I have taken a small exploratory position. Tesla I am watching it for a breakout to the upside. AMD looking at the weekly I am less keen to consider buying. So none of the mega caps are telling us to short. Most of them are bullish and few of them are at a point where I may consider buying in fact. So if mega caps are like that, they will have an impact on the market. That's why I am not going to be very bearish, at least from these few angles. What angles? So far I have looked at the market ETFs, none of them are telling me to short now. Again, I have booked profit in my short positions, many of them. It's not the time to short now looking at the market ETFs. Looking at the mega caps, also it's not the time to short now. So I looked at the mega caps individually. What about the mega cap custom index? This is the weekly daily for mega cap custom index. Where is the bearishness? Does not exist. Is it in an uptrend? Yes. We have trend line support, no trend line resistance. Is the uptrend now becoming more like a sideways move? Yes. Do we have warning signals? Yes. But it is still in an uptrend. We need this trend line support to be broken. Then it will be near the yellow direction line that has to be broken. Then we may think of looking for shorts. Not the time yet. So mega caps as a whole also looking quite bullish. What about the overall market breadth? Now that was one analytics that helped me decide to short well ahead of others. Let's look at that. The very useful one page breadth inside. Market breadth total view. We had series of Hindenburg alerts, series of Bango, that is irrational exuberance, thanks to Mr. Ian Woodward, may him rest in peace. We even had, last week I mentioned in the market recap, Phoenix. And I forgot to explain what Phoenix is. Probably you know very well, maybe better than me. But I thought of mentioning it in today's session. I pointed to the Phoenix last week also, and you can see on Friday another Phoenix has come. What is Phoenix? Phoenix is opposite of Eureka when it comes at the top. What is Eureka? Eureka when it comes at the bottom after a down move, Eureka is equivalent to CAN Slim's follow through day. So turn around day could be here. Then we need a follow through day in CAN Slim to start buying. Mr. Ian Woodward created an equivalent automatic signal, that is Eureka, at the bottom. Phoenix is opposite of Eureka. So if Eureka is the follow through day for bullish trades at the bottom, Phoenix is the follow through day for bearish trades at the top. I was shorting then. If we look at the market breadth total view candle chart, has it dropped much? Let's look at its weekly daily. Let's open the weekly daily. This new version of Metastock, I can have multiple layouts. These layouts are similar to TradeStation desktops. Just moved it from another monitor. So this is the USA Total View Index using weekly daily. Is it in a downtrend? Here, yes, it is in a downtrend now. Why I say that is because I have trendline resistance but no trendline support. Earlier trendline support was here, that was broken. Then we wait for lower high. That has happened because we have trendline resistance. So USA total view is in a downtrend. However, I'm not able to short right now because we have the yellow direction line just below Friday's close. I need that to be broken, but by the time that is broken, the stop will be far away. So I have to wait for the total view also to break this, go up, create a lower high and come down again to take a low risk short trade. Here uptrend is under pressure. You may say it is starting to be in downtrend. Technically, it has given a flow short setup on Friday. However, the support is so close, all these insights are additive. We have a short setup, but if support is so close, I'm not going to short it. So I'll wait for a recovery and a lower risk entry point when there is no support nearby. Let's go back to the breadth chart. We had the Phoenix last week, we had two Hindenburgs. This week we had one distribution count of 2 on Wednesday, and we have a distribution count of 4 on Friday. 1, 2, 3, 4. Earlier the distribution counts were not there except here for one very sharp drop. Distribution count of 5. After that market recovered, there was no distribution count at all. Anything above 1 is significant, so we didn't have any distribution count, not much, only here 1 is not significant, but we started having those distribution counts only this week, 2 days in the same week on Wednesday and Friday. Friday we didn't only have a very large distribution count, we also had Hindenburg and we had the Phoenix again. So those are continuing to be cautionary signals. I tweeted on Friday from QH that the market is oversold. Is there any oversold signal on this market breadth total view? Not yet, but it is reaching there, going there, not very far from that. Look at the percentage of stocks above 50-day moving average has to drop little bit more to hit the lower threshold, that is the oversold level, and if it hits that, I am going to start to look to buy. Just like when it hit the overbought level, I started to look for shorts. Also, if you look at the 3-month new high low, last week I mentioned it turned bearish. Now it is not at oversold level yet, but it is getting very close. Little bit more down move, it will become so oversold that I will start to look to buy. Now, one question that I always ask myself, and I can get the answer from Q Systems, that this Hindenburg and the Phoenix this week came from where? In the past many weeks, the Hindenburgs came from Nasdaq. NYSE also had confirmed Hindenburg, but the occurrences were less. So let's find out where the Hindenburg came this week. Nasdaq market breadth and NYSE breadth. This week's Hindenburg came in NYSE, and we already had confirmed Hindenburg earlier. This was the first alert. We had confirmed Hindenburgs earlier, and again it came this week. Nasdaq did not have the Hindenburg this week, but had the Phoenix, had the distribution signal also. So both NYSE and Nasdaq are under pressure, but for the reasons that I discussed so far, is not the safest time to short, especially if any of you are thinking of buying put options. The volatility is so high, it's not the right time to buy put options. In fact, now again, if you look back, when I took the bearish trades on QQQ, when probably nobody was shorting QQQ, I mentioned I took one position using long put vertical. That was the time to use long options. Long put vertical is volatility positive. That was the time to buy long puts. Verticals are also volatility positive. Now volatility has increased, so I profited not only from QQQ coming down, not much, little bit, but volatility increased a lot. Let's look at the market now from some other angles. Let's go back to Q Edge. I tweeted about it, but it's time to look at it in more depth. Just a few weeks ago, I think 2 weeks ago, it was all green. And I remember mentioning exactly this, that it is looking too overbought, that a pullback was likely. Just I think 2 weeks ago. Last week it deteriorated. Last week, the monthly period, again, all the videos are on YouTube, was still green. Now it is very red, and so red, I'll repeat what I said just a few weeks ago, but in the opposite direction. Few weeks ago I said it was so green, it was overbought, looking overbought. Now it is so red, it is looking oversold. But we have in Q another way to assess oversold situation, that is from the bucket analysis. Whenever the percentage of stocks below lower Bollinger Band, that is in the lowest bucket, hits 30-40%, then it is oversold. From that angle, it is not oversold. But Q has another unique angle, that whenever the percentage of stocks in the lowest bucket in one day jumps by more than 10%, it is oversold. It is too oversold from that angle. And isn't it interesting? Just a few weeks ago in the market recap, I showed market recap or Twitter, one of these platforms, I showed that the percentage of stocks in the uppermost bucket suddenly jumped up by much more than 10%. And I mentioned right on that day, though the percentage of stocks above upper Bollinger Band in itself was not at 30-40% level, the jump was so sharp. I mentioned right on that day publicly before knowing the results as usual that it was overbought. I think I caught that very top at that time. Now it is the opposite situation. Last time it worked beautifully. There is no reason for me to change my trading tactics. I'm not going to go all out. Shorting now, it is oversold, and that is one reason I booked profit in many of my short positions. I follow my own guidelines quite well. Start shorting when market is looking oversold. I'm having warning signals from technical breadth, sector industry breadth from Hindenburg's, etc. I buy back the shorts when I see market is oversold. I'm looking to buy, but it's not that time yet. And it's not that time because oversold markets can remain oversold for a very long time. Just because it is oversold doesn't mean I'm going to buy. I will wait for market to show weakness where in this sector industry stock graph and also in technical breadth. That's what I did for shorting at the top. I'll do the same for buying at the bottom as well. How is the technical breadth now? Let's find out. Let's go to weekly first. I already showed it in the beginning of today's session that the weekly is very bearish. It became more bearish from last week. Last week we had the headwind alert telling that it was going to most likely come down more. That happened. Headwind alert is still there, so it's saying that it may come down more. However, it is looking oversold. Again, I'm not going to buy just because it is looking oversold, especially when I have a headwind bearish alert in weekly. But I am watching both bucket analysis, the technical breadth, as well as sector industry stock breadth to see when is the time to start buying again. I guess I will again buy before others, just like I shorted before others, and I guess I will be continuing to be as accurate as before, which is enough to make me some money. Daily technical breadth, very bearish, and that's why I mentioned looking at this daily technical breadth, there is no point looking for buy candidates unless of course some exceptional cases, like I took a small position in Apple. That was because of a very strong pattern. Big move up 3 at price extreme low, jump thrust low. Price had fallen for Apple before the market, and now it is showing strength, so I took a small position. But in general, looking at the technical breadth in the daily interval, there is no reason to look for buy candidates. It is oversold from many angles, so I am not very keen to look for shorts, but there are short candidates where the stop loss is not very far. I will not discuss many of them. Again, for me, the market level is very important. When market level I am saying oversold, not very keen to short. But at the price extreme high, if I go to the bearish candidates, there are plenty of them, and you also see many of them are at price extreme high. Those are lucrative short candidates. What I may look for is also squeeze move. Again, I am not going to actually look for many shorts, but when I have time, I may discuss the technique a bit. I looked for stocks at price extreme high. Now I may look for stocks that are moving out of a squeeze, very unique pattern. Let's look for stocks that are not only having squeeze move but also breaking down. Flag for breakouts. left with only 10 stocks. I'm not going to even open 10 stocks. I'm going to carry a fundamental analysis to see if any of those are fundamentally weak. At price extreme high, fundamentally weak, those will be lucrative shorting candidates. See, if I'm finding shorts, I'm not finding stocks that are already down where the stop loss is far. Instead, I'm looking for stocks that are at a high price level. That's my usual way. Always take low risk trades. Look at these stocks. Look for at least 1 star red, either overvalued or negative earnings growth. And instantly, I see there is only one stock that is 3 star. Let's click 3 star red. Only one. From thousands of stocks, in an oversold market, I found a stock that is at price extreme high, breaking down with squeeze move, moving out of a squeeze, breaking down with overvaluation, negative earnings growth, no fund buying. Time to look at it using the one page scorecard. Same information, but visually more something I like to see. And I have some graphs also here. It will also show the peer analysis. So it's useful always to look at the single page scorecard. While it is retrieving data, let's look at its industry, aligning all the forces. Excellent. This is what I like to short, turnaround candidate. One of the weakest industries now, one of the most decelerating industries over 2-day period. Score is weakening, is perfect time. Weak and decelerating at the same time. Let's go to the stock scorecard. Very well-known company, of course, Hyatt Hotels. Overvalued, negative earnings growth, sharply reversing down earnings growth, no fund accumulation. 100% of peer stocks are down, steadily coming down. Earnings growth coming down, revenue growth coming down. Everything about the fundamental is bearish, everything about the industry score is bearish. We know the technicals are bearish. Let's now look at it. I'm using Metastock 19 quite a lot. Instantly, I find a stock using live analysis that I like. Market is oversold, but this stock is not at all oversold. It's in fact at price extreme high and jump thrust high. It does not have any big move down 3 after price extreme high jump thrust high combination. So this is the combination. Don't have any big move down 3, but we have big move down 2. And more importantly, for this particular chart, it has a beautiful breakdown where the stop loss is very narrow. I'm always looking for narrow stop loss. It has a breakdown setup, moving out of a squeeze. It may also give a possible flow short setup, but we have to look at the weekly to confirm that. So let's look at that. Yes, so we have two short setups here, one breakdown and one flow when we look at the weekly daily. We already had the bearish cluster indecision in the weekly. We could get ready to short, but Friday was the first day we could think of shorting with narrow stop loss. Let's look at the momentum signals also. If we came all the way, how many red dots are there? We can find that out. Here also we saw it's coming out of Q squeeze earlier. It's also coming out of the momentum squeeze. It has 3 red dots. That is Mobo breakout, which happens to be from a squeeze with a kahuna and a bongo. Those are additional momentum signals, and we have enough reasons from Q signals to short it. So that is one stock I wouldn't mind shorting. I did not short it on Friday. I'll keep an eye on H next week, and if it continues to go down, let me save the stock. If it continues to go down, I would not mind taking a short position using precision entry fine tune chart. That is how I trade, always risk averse, always looking at what I see and believing only that, always avoiding shorting oversold markets, avoid buying overbought markets. Different Q techniques, signals help me in assessing the market dimension, then sector, industry, then fundamentals, then technicals. We are at 1 hour point. Let me end today's session here. Thanks a lot for joining. I look forward to seeing you again in my next session next weekend, most likely. Have a great weekend. And as I always say, as these live examples always show, I hope, there is no reason not to do that. Trade profitably. Thank you.